What if I told you that one of the most important financial power shifts of the next decade isn't happening in public speeches, emergency summits, or headline-grabbing currency wars, but quietly through a metal most people barely think about anymore? Not gold, not oil, silver. While the world scrolls past market noise and short-term headlines, China has been methodically positioning itself around one of the most strategically critical resources in the modern economy. And once you see the full picture, it becomes very hard to unsee. This isn't speculation, it isn't hype. It's a slow, deliberate accumulation with consequences that could ripple through global trade, manufacturing, energy, and finance. If that sounds dramatic, stay with me, because this story unfolds far beyond silver prices. And before we go any further, if you find value in deep analysis like this that most channels won't touch, take a second to like this video and subscribe to the channel. It really helps more people find content like this, and it tells me you want more reports like this from the Silver Collapse Report. Silver has always lived in gold's shadow, dismissed as the poor man's metal or treated as a secondary asset, but that reputation hides its true power. Silver isn't just money, it's infrastructure. It's woven into the physical systems that hold the modern world together. Every solar panel, every electric vehicle, every smartphone, every data center, every advanced weapon system relies on silver's unmatched conductivity. Unlike gold, which mostly gets stored and admired, silver gets used up. Once it's embedded into electronics, circuits, and industrial components, much of it is never economically recovered. That makes silver fundamentally different from almost every other precious metal. It's not just scarce, it's disappearing. Now zoom out and look at the world we're rapidly moving into. Governments are pushing aggressive green energy targets. Solar installations are exploding globally. Electric vehicles are no longer niche products. Artificial intelligence, data centers, and 5G networks are expanding at breakneck speed. All of this requires silver, and not a little of it. Demand is no longer theoretical, it's structural. At the same time, global silver supply has remained stubbornly constrained. New mines take years, sometimes decades, to develop. Ore grades are declining. And a large portion of silver production is a byproduct of other metals, meaning supply doesn't respond quickly to higher prices. This is the foundation of the problem, and China understands it better than most. China is not just a consumer of silver, it is one of the world's largest producers, refiners, and importers. More importantly, it operates under an economic model that allows long-term planning on a scale Western markets simply cannot match. While other nations leave strategic resources to the open market, China treats them as national assets. When silver enters China, it doesn't just flow through speculative markets. It flows into manufacturing chains, government-controlled entities, and long-term reserves. And unlike Western countries, China is under no obligation to fully disclose how much it truly holds. This opacity is critical. Official numbers only tell part of the story. The real influence comes from what isn't reported. Industrial stockpiles, state-linked reserves, strategic inventories embedded within supply chains. China doesn't need to announce a silver-backed currency or declare dominance over the metal. Market control doesn't work like that. Control happens when a single country sits at the center of production, refining, and consumption. Control happens when others depend on steady access, and that access can be restricted without warning. To understand why this matters, consider the difference between financial leverage and resource leverage. Financial leverage depends on confidence. Resource leverage depends on reality. You can print money, you cannot print silver. If supply tightens, manufacturing halts, energy projects stall, defense systems face bottlenecks. And China, by positioning itself upstream and midstream in the silver supply chain, gains leverage that doesn't require confrontation. It only requires patience. Historically, this strategy is nothing new. Empires have always accumulated what others overlooked. Britain accumulated silver and gold during the rise of global trade. The United States stockpiled oil, steel, and agricultural output during its industrial ascent. China's accumulation of rare earth elements followed the same blueprint. For years, rare earths were dismissed as obscure inputs. Then, one day, the world woke up and realized China controlled the refining, pricing, and availability. Silver may be walking that same path, only with far greater consequences, because silver isn't niche. It's everywhere. What makes this moment particularly dangerous, or fascinating depending on your perspective, is timing. Demand for silver is accelerating just as supply becomes more fragile. Western nations are facing budget constraints, political gridlock, and deindustrialization. Strategic stockpiles that once existed have been sold off, leased, or ignored. In contrast, China has spent decades quietly reinforcing its industrial base. Solar manufacturing, battery technology, electronics production, these aren't accidents, they are demand sinks. When silver flows into those systems, it becomes locked away, unavailable to the global market. This creates a subtle but powerful dynamic. Prices may rise slowly, even deceptively, without triggering panic. Meanwhile, availability tightens. Inventories shrink. And one day, users discover that price isn't the problem, access is. This is how real supply crises unfold, not with spikes, but with silence. Of course, skeptics will argue that silver markets are too small to matter or too volatile to control, but small markets are easier, not harder to influence. A few $1 billion redirected into physical accumulation can reshape availability. Others will say alternatives will emerge, but silver's conductive properties are not easily replaced. Substitutes often require more material, more energy, and higher costs. In an economy already strained by energy inflation and geopolitical instability, that matters. There's also a psychological element at play. Markets are narrative-driven. Gold has a story. Bitcoin has a story. Silver's story has been forgotten, and that neglect creates opportunity. While speculation cycles in and out, strategic players operate below the surface. China doesn't need retail investors to rush into silver. It benefits from apathy. It benefits when prices remain low enough to accumulate quietly. It benefits when the metal is dismissed as boring. Now ask yourself this. What happens if global energy projects begin competing with consumer electronics, military demand, and industrial manufacturing for a metal that's already in structural deficit? What happens when supply chains that rely on just-in-time delivery discover that silver can't be sourced quickly anymore? These questions don't have clean answers, but they point in one direction: scarcity. This isn't about predicting a sudden collapse tomorrow. It's about understanding momentum. Momentum is built quietly over years. By the time headlines arrive, positioning is already complete. And this is why discussions like this matter, why channels like the Silver Collapse Report exist, to look where most people aren't looking yet. For the average person, this may seem abstract, but the consequences are real. Rising costs for electronics, higher energy prices, delays in infrastructure projects, increased geopolitical tension over resources rather than currencies, and potentially a reevaluation of silver's role not just as an investment, but as a strategic asset once again. There's also a financial angle that cannot be ignored. If trust in fiat systems continues to erode, metals regain relevance, not just as hedges, but as signals. Silver sits at the intersection of money and machinery. If gold represents stored wealth, silver represents functioning wealth. An economy can survive without hoarded gold. It cannot operate without silver. China understands this. It doesn't need silver to replace gold. It needs silver to power everything else. That distinction matters. This isn't about returning to a silver standard. It's about controlling a bottleneck in the global economy. As we move deeper into an era defined by electrification, digitization, and energy transition, the metals that enable those shifts become geopolitical tools, and the country that controls them gains influence quietly, efficiently, and persistently. Whether the rest of the world acknowledges it or not doesn't change the reality. The real question is not whether silver will matter. It's who will have it when it does. Because when demand becomes unavoidable, the conversation shifts from price to power. And by the time that shift becomes obvious, the strategic game is already over. If this analysis made you think differently about silver, supply chains, and global power, make sure you're subscribed so you don't miss future reports. This channel is dedicated to cutting through noise and looking at what is actually happening beneath the surface. Thanks for watching, and I'll see you in the next report.